Good afternoon, ladies and gentlemen. Today, we're going to have a discussion about mortgages and the importance of the underwriting process, the true, I would say, meat and potatoes of getting you qualified and allow you to close on that next home. I want to welcome to the table here Team Karlin. You've got myself, who is the right hand man to Mr. Karlin himself on all loan operational and front end processes. And I'm going to introduce the man, the myth, the legend himself, Mr. Peter Karlin, the maestro of the mortgage industry. And on the other hand, we have Megan Thayer, our head master processor. And I'll let you two take the floor here as we kind of welcome some questions and discussion.
Awesome. Thank you, Alex. I appreciate you, brother. Appreciate it.
Anything you guys want to say about yourselves so the audience can learn a little bit about you before we jump into questions?
Megan, you go first.
My name is Megan. I am the processor here on Team Karlin. I have been processing since 2018, working in various states, multiple loan products. And before that, I was actually an underwriter, and that's how I was trained in this industry. So I can bring some insight from that viewpoint to our discussion.
Cool. Peter Karlin, been a mortgage loan officer since 2013. 10 years as a retail loan officer, and last 2.5 years as a mortgage broker. It's it's an interesting industry. It's challenging. I have a great team. I love that we're here together talking about the loan process and just trying to educate people out there and give you a little insight. If you have any questions for us, by the way, feel free to hit us up. We'll have our information somewhere in this video. And Alex, take it away.
Thank you, Mr. Karlin. Yeah, we'll share a few different links through social media where you can access the team. So I want to start off, right? Because I think all of us on here, we enjoy speaking to clients, right? We enjoy meeting new people. That's the most fun part of the job that we do. We want to get people through the door. We want to get them to the closing table, right? Especially if that's a home of their dreams. But there's a large journey in between that I think a lot of individuals don't fully understand, and that's underwriting, right? The part of the process in which really qualifies you or does not qualify you. And it's very important to understand how that works and what all that means. So the first question, we'll start real basic here. In reality, we may be speaking to folks who have never purchased a home or even know much about the mortgage journey. So could you guys talk a little bit about, what really is underwriting and what is the underwriter looking for in order to underwrite your profile and, decide whether to qualify you or to not?
I can take
Can
this
I?
one, Alex.
Go ahead,
I'll
go ahead,
start with
Megan.
this one, Alex. So we are a broker and we decide what lender we are going to send our loan to. We have hundreds of options. We do our job up front to make sure that the client meets investor guidelines. So investor is different than the lender. Investor can be the lender in some cases when you're doing a non-traditional product. But when you're doing a conventional VA, FHA, USDA loan, the investor is ultimately who decides what the guidelines are for this particular product. The lenders that fund the loan are underwriting to the investor. So once we take the loan and send it to a lender, the underwriter will review the file and they will determine if the investor guidelines are being met. This means they will reference everything you provided against the guidelines and see if you meet the guidelines and that you're able to close on the loan. So the underwriter is not someone on our team. And sometimes clients will ask, hand me a file and say, can I get the clear to close? It still has to go to the lender and go through the underwriting process. That's a
It's
kind of a brief definition.
Yeah, I love what you just said, and you really broke it down between investor and lender. I tell people, when people ask me, right, about underwriting, I say like an underwriter is like the decision maker for the lender, or the decision maker, yes, the decision maker for the lender, and it's sort of like the judge in a courtroom. Right? The judge in a courtroom is making, well, not when you have a jury, but the judge in the courtroom is the decision maker on the trial, right? And then you have the legal team, which I equate to us being sort of like the team that builds the case, puts the case together to bring it to the judge, right? And say, hey, judge, here's why we think our client should get a loan for this home, right? And it's our job to put together a good package to present to the judge. So what the judge or the underwriter looks at the package, they say, yeah, I see it. Yeah, good income, good credit, right? Debt to income ratios look good, money in the bank. Okay, yeah, I'm ready to give them the loan. So that's how I sort of break it down for people as far as what is an underwriter doing, you know?
I
Yeah, it's a
think that's
decision on risk. Will they be able to repay this loan? You look at the big picture, you look at the little details that are very mandatory and required, sometimes can really get in the way. And overall, just make that credit decision. Are we willing to risk lending to this client?
Right on.
I think that's perfect. It all comes down to risk. I think that's in any form of underwriting, and a big piece of it and what we do, especially up front, right? Myself, Mr. Karlin, as we speak with you initially, is figuring out your story, right? Because it's not always as straightforward, black and white. Here's a pay stub and here's a dollar amount, right? There's a lot of times a story that we need to portray to underwriting so they understand the full picture. And that's really what utilizing someone like this team is so important and so highly valuable, is because that's an important process to it, right? Anyone can kind of be a paper pusher and take your paper, your documentation from one step to the next, but it's really telling that story and making sense of it, because we're taking out from the client to a third party source.
Right.
100%.
Some people look at us and might say, why do you need so many people? Right. Isn't there just one mortgage person? But there is a lot of work and detail that goes into this.
Oh,
And
true.
there is a reputation where people like me as a processor just click buttons and push the papers. But there is so much more to it, making sure it goes quickly, efficiently, the client knows what's going on. And that, yeah, you portray that story to the underwriter and you're not just giving them a pile of papers that don't meet, don't give the clear picture of what's going on.
Yeah, yeah.
So
Quick side story. Quick side story. I a few years ago I went into a local retail bank to get a small personal loan. And I know what documents are needed. I'm in the loan business, right? And right, so I gave them all. I had all my documents on a jump drive. I gave them the drive, and they submitted the documents, and I didn't get an answer. It was a small loan. It was like a $35,000 loan. I didn't get an answer back until like a few weeks, and then they asked for documents that I had already given them. They asked for more, and that was annoying. And then in the end, they actually denied me. They denied me, which I couldn't believe it. And it was incredibly upsetting. And I wanted to speak to someone. I wanted to speak to a processor. I mean, I wanted to speak to somebody about the loan, and I couldn't get a straight answer. I couldn't get a great answer from the folks at the retail branch. It was just so upsetting, I got to tell you. And I walked out, and I ended up getting a loan on a website, a wonderful website, which I'd highly recommend if people are looking for personal loans, lightstream.com, and I got the money in 2 days. In 2 days, I was approved online in about a minute and a half. Didn't have to submit any documents. It was crazy because they do electronic checking, and I got the money in 2 days. So it's important to go to people, a team or that that's going to work with you, right? And as you just said a moment ago, not just paper pushing.
Yeah, that happened to me too, Peter. I applied for a home equity loan at two banks, got denied. Had to teach both people at the bank that aren't trained in mortgages how to fill out a 1003. I was literally helping them at the computer fill out the 1003. And I was very discouraged. And I went home and applied for a cash out refinance and got it done in a week on my own.
It's absolutely crazy. And I tell you something, it's really one of the things that I love about working with the two of you is that, you're intelligent, you think, right? It's important to, I mean, it's important to think, I think, in almost anything we do in life, but especially when you're doing a mortgage, because it's a big thing. I mean, it's it can be hundreds of thousands, if not millions of dollars that you're requesting from a lender. So, you want you want a team that's working smart with your documentation and your scenario.
You guys mentioned a few things that kind of stood out there. You mentioned debt to income ratio, right? So the importance of a credit profile. So meaning things like a credit score, right? All these things come into consideration, right? When we're talking about income, versus debt. Those are all the highly, profiled items that they're looking at in regards to their risk analysis, right? And all of those will go on to that initial application, or as we call it in the mortgage industry, a 1003. How important is it that you guys think, when a client's filling out that 1003, that initial application or questionnaire, how important is it that they're filling it out as accurately and to the best of their ability?
Peter, I'll just start as a processor. The 1003 needs to be filled out to the best of their ability, but no client out there that isn't familiar with our industry can possibly do that without the loan officer going through it with them. Whether that means they fill it out and then have a consultation, or the loan officer goes through it with them while they fill it out. It's almost impossible for them to get a 1003 correct without going through it with a qualified professional, because there are things that might not make sense to them. They don't know why they're being asked that, how important the residence history is, the income history is, the declarations. What do they actually all mean? What are you certifying about having debt, having any sort of derogatory debt? So I really think the 1003 is only as good as the borrower and the loan officer working together to get it filled out correctly.
100% agreement. 100%.
And that's what I was mentioning. That's the story, right?
That
Is
is the story.
piecing that together, because that's the first item, right? Your 1003, your application, your questionnaire, that's the first item that underwriting is looking at before they step foot into looking at your documentation, which we'll go into next, a bit of what's required. But they want to understand what it is we're submitting to them, what your profile and background is, because at the bare minimum, that's their first step, right? Because there's going to be figures on there for your monthly incomes. There's going to be asset numbers on there for how much money you truly have in liquidity, in investment accounts, retirement accounts, whatever it may be. And that's also where they're going to see your monthly expenses, your monthly liabilities that have come over from that, initial credit pool that the team does. Right. And so as we kind of dig a bit deeper onto this 1003 on underwriting, a big part of it is going to be that income portion, right? Everybody, even before we move through that underwriting process, the first step to buying a home and receiving financing is getting pre-approved, right? And that's a pre-underwrite. It's relatively similar. It's just not the underwriter doing it. It's the team like myself, Mr. Karlin, Megan, who are reviewing that documentation to ensure that on paper you do qualify and afford for the home you're looking to purchase. And the big piece, like I said, is income. So as we talk about income, guys, I mean, there's so many different income scenarios out there. You have employees who are salaried employee. Let's say they make $100,000 a year, right? And that's pretty straightforward as to how that works. You have employees who work hourly. There's employees that work hourly that maybe work overtime. And I think a lot of us know that most often or not, when you're working overtime, sometimes your hourly wage changes. It could be time and a half. So now it gets a little bit more in depth as to how we need to review this, and also in regards to what's required for this. You have individuals who are self-employed, right? So you're not receiving pay stubs. You don't work for a company, you work for yourself. So that means you're usually filing some form of tax return, whether it's your personal return, or maybe your business is established to the point where you're filing some kind of business documentation, right? So I guess the question I have for you guys around this, when it comes to income, what are you guys looking for on this basis for a client? I know we've talked about different backgrounds here. If you guys want to focus on certain styles of income first, go that route. But really, how do you help someone understand what's needed on the income side of being qualified and approved with underwriting?
Well, I tell you something, Alex. It depends on the loan type, right? So I'm not, if somebody tells me, right, it's important to do like that initial interview that you and I have done so many times, right? Where we ask someone, what kind of loan is this? Are you buying this as what we call debt servicing loan, an investment property where you don't need income, right? Are you, how does your income look? Are you a W-2 employee? Are you a 1099 employee? Do you own a business? Do you do business tax returns? Can I see those tax returns? Do you show net, if you're self-employed, do you show net income? Are you an hourly employee? There's all these different things that need to be answered, to figure out what kind of loan you're doing. So from the loan type, right, from the loan type, or from the income, and we figure out from the lack of income or no income or investment property, or what kind of income we need, and then how to break down the income, right? And of course, you know everything I'm saying. So are you buying it as an investment? Are you buying it as a primary? Are you a first-time home buyer? What do you do for a living? Do you show, you have a business, or how are your bank deposits? So all these questions come into play. So it's hard to sort of answer an income, like what I look for in income. I don't look for anything in income. I just want to know what the story is. I want to know where you're coming from and what your goals are. Right. And even
Well, playing
before,
off that, getting the 1003, having an accurate 1003 is your roadmap for what you're going to need for income, right?
yeah,
So,
yeah,
if you're a loan officer and you're handing me a new file and you're like, Megan, this is ready for you, and there's 3 months of income on there, how did you qualify this person? How do you know their income story? You know what that tells me? You don't know their story.
yeah,
You know it. How do you know that they even have a 2-year history? Well, there were other W-2s.
Mhm.
No, I need to know the story, and that tells me we're not on a good, clean path with this loan, right? Um, so that needs to go back to the loan officer to get a better 1003.
yeah,
So until we have that roadmap from the 1003, we cannot proceed. And there are a million different directions that road can go in, but we have to start with the correct application.
yeah, yeah.
That
That's
goes
great.
back to our storytelling. And
Correct.
that's kind of what I want to talk about next, because now we've kind of spoken about income a bit. I wanted to talk about the credit situation, right? You guys can talk maybe directly on to what scores mean and what they do to what you qualify for. But I think a big part of that, what everybody wants to hear nowadays, is what kind of interest rate can I get, right? And how is that established? Okay, so a big part of that, like we said, is going to come from that credit score and what that credit report looks like. But talk to our audience here a bit on what you're looking for when you're pulling that credit in the sense of your monthly expenses, liabilities, responsibilities. I think we get a lot of questions. Folks are saying, "Oh, well, I have, I pay this much for my phone bill. I pay this much for my utilities." And I feel like there's a lot of discrepancy there as to what exactly underwriting is using as those monthly expenses and what that does for you.
Megan?
So credit and DTI are something that this is kind of one of those things that's pretty easy to figure out up front, except for there are so many things that can come up. But they want to just see what your ratio is of what your expenses are compared to what you make. And it's so important that they determine that you're within a certain bracket of that. Every investor has different thresholds. So on a conventional loan, you can go up to 50%. On a VA loan, you can sometimes go up to 70%. It all very much depends. But with your credit score, it's really important to see, can you pay things back are you able to pay back things that you agreed to pay back, right? If you have a history of not paying them back, why would we give you hundreds of thousands of dollars? So sometimes people have a lower credit score because they don't have a lot of credit history too, which you might think that's not that bad. They just haven't used credit. Yes and no. There's a reason why they have a lower score. You don't have a history of proving that you can pay back loans that you sign. So it's a really good, is the credit system perfect out there? No, it's not. Is it kind of archaic? Maybe some people say it is. But overall, it gives us an idea of you can pay back your debts that you agree to pay.
Exactly. Exactly.
And did you take out too much debt? Do you have room for more? Or are you kind of maxed out?
Yeah. Yeah. I mean, credit, right? And on a credit report, when you look at a credit report, it's giving you about approximately a 7-year look back on somebody's trade lines on somebody's trade line. What's trade line? It's a credit card account. It's a loan. It's a car loan, a student loan, a mortgage. Sometimes people put their utilities on it, but typically you don't. Typically, you wouldn't see utilities on a credit report, right?
No.
Utilities, car insurance are not going to be on a credit report.
Even if it's on there, you don't have to count it.
Yeah, you don't have to. Thank you.
Yeah.
So it's a 7-year look back, right? And if you think about it, if you were giving your money, if you were lending your own money to somebody, you'd want to see what's their track record of paying their bills, right? Right? What's your track record? How do you pay your bills? And furthermore, we also frequently check how's your rent. If you're renting a property, as you guys know, right, we'll look back 12 months. We'll go to a verification of rent, a VOR, and check in on your rent payments. How's your rent history? So, because think about it, everybody, we're lending you a large sum of money. Typically, it's a 30-year loan. We're getting into a relationship with you for 30 years. Well, not we, but the lender's getting into a relationship with you for 30 years and giving you a big chunk of money. You would want the same thing. You'd want the same security to know that you're going to be repaid in a timely fashion. Now, sometimes we get credit reports, Alex, as you know, and Megan, that need to be cleaned up. People have issues, right? One of the things that we do, our team, will help people get their credit clean, right? How do you get your credit clean? Well, you hire, we know a few things about credit, but if it really needs a big cleansing because you've got charge-offs or collections or really some bad blemishes, then we would send you to one of our preferred our credit repair person. But credit is hugely important. Credit, income, of course, and money, right? You need to have the money for the down payment and the closing costs available as well.
Now, there are some products out there for people that maybe don't have the credit. They don't have a score. They don't have good credit. They don't have income that they can document, right? But inherently, those products involve what? More risk, right? So
Right.
I want more money down.
More risk, more money down.
More money
higher
down,
interest rate.
worse pricing, right? Like
Yeah.
you want to do an FHA loan with no credit score, you can, but you're going to have to document 3 alternative trade lines that aren't reporting to credit, and you're going to get worst case pricing.
Yeah.
So yes, there are products out there, but if you don't have the income and you don't have the credit you better have the money. One
Right.
thing I run into a lot is loan officers trying to save deals with high debt, no money, and low credit scores. Like, can't get the findings drawn. I can't get the findings drawn. And it's like I say over and over again, you cannot take this loan with someone getting a gift, not using their own money, having low credit, and having a high debt to income ratio. It's just not going to work.
Right.
We can't do those. We have to nurture those leads, educate them. There are no products for that. You have to have one of the 3 pillars. You've got to have super high credit, lots of money, or really low ratios, lots of income. You can't have the bottom of all. And that's something everyone always wants to try to do. Like, I can do an FHA loan. They say you can go down to 580. Well, how much are they putting down? 3.5%. And how much money do they have? A gift from their mom. No, no. So, there's options out there depending on which one you fall short.
Right on.
I think that's the
You gotta
best
have
way.
something going for you.
Yeah.
And that's the best way to look at this, right? Because there's nothing simple about a mortgage, in my opinion. You can Google what a mortgage is. You can look up what, Google tells you the rate is. But I mean, let's be honest. No one truly knows what goes in and what's involved in a mortgage. I think the simplest way to look at it, as we're speaking about, is risk. The higher the risk, the harder maybe it is to get approved. Maybe the higher the interest rate. The lower the risk, maybe the more qualified you are, the easier it is to get approved, and maybe the better the rate is that you can obtain. But at the end of the day, it is all about risk. And sometimes I've even done this with some of our clients. They'll get upset or frustrated or angry. Well, why isn't my rate lower? Or why don't I qualify for this program? And it's as simple as kind of you guys were saying, right? Think about, I don't know, your best friend or a family member, and let's say you loan them $10,000 and you never see that money again. You never hear from them again.
Yeah.
So it's now, that's a risk. You're already running the risk of lending your friend this. Maybe they already have a history of not paying back any kind of loan that maybe you've given them. And now they come back 2 years later, hey Peter, I need an extra $10,000. I know I still owe you 10, but I promise you I'm gonna get it to you. You're more than likely not going to give them that money.
100%.
Right. So sometimes I try and break it down as simple as that. I understand these banks, these underwriters, they're not our friends, they're not our family, but it's the same idea of risk, right? The same way we evaluate risk in our daily lives in those kind of matters of maybe helping out a friend, a family member. It's the same idea when it comes to a bank. It's just they're following actual guidelines where us as humans, we're following our own beliefs, I guess. But it
Right.
really boils down to risk. And
100%.
I know we've done a lot of focus on this 1003. I want to remind everybody a 1003 is your initial application, your initial mortgage application. Some like to call it a questionnaire. This is where we get your story on paper and where someone like Mr. Karlin and myself go hand in hand with you to ensure that we have your story correct. Okay. So, what I want to kind of finish up with here, we've spoken about all the big points in regards to what's needed to qualify, what goes, on a 1003, a mortgage application to get you to the point to be involved with an underwriter. So, guys, what would you say makes a perfect application, a perfect 1003? What is sufficient or enough to even move the client from, the early stages of pre-approval stage to getting them into an underwriter and approved?
I would say every section complete, like we discussed, and reviewed with a loan officer. Not every 1003 is ready to move into underwriting right away, but that
Right.
is the first step. So 2 year residence history, 2 year income history, and not 2 year assets, but enough assets to pay for what you're trying to do verified. So once you have that and there's been a consultation, I would think that is I wouldn't say might not be a perfect loan, but it's a perfect 1003.
Yeah. Yeah, I like that answer. One of the things I just want to throw in, Alex, that I strongly encourage people, if you're thinking about purchasing a home, even if that is 5 months away, even if it's a year away, you should sit down with someone like us, right? You and I, Alex, as loan officers. And I'm sorry, Megan, you're a loan officer as well. But Megan, by the way, everybody, Megan's a loan officer, and she was an underwriter. So she got so much wonderful information and knowledge. But someone to sit down with you and I, Alex, and to map out a plan. Where are you now? And where do you need to be to buy what you want to buy? Right? Don't wait till you're I'm in contract, or right. How many times have we seen, oh, I'm in contract, I want to buy a home again. Oh, let's talk about a mortgage. Too late.
Or how
Too late.
about they want to put in an offer this afternoon?
Too late. No, don't do it that way.
Yeah.
Sit down now. If you're thinking of buying a house, you sit down now with a mortgage professional, a loan officer, and you figure out your game plan. You're going on a vacation, you're going on a trip. I mean, I know a lot of people like spur of the moment, let's just go, and that's cool, but that's not how you do it when you're buying a house, I would
It
suggest.
does seem like
right?
a lot of people happen to be going on trips when they need to close a mortgage, ironically.
Say that again.
Seems like a lot of people have vacations and trips scheduled when they buy houses. It really seems like it happens
They're
all the
already
time.
celebrating the new home. Okay.
It's like, oh, well, just by the way, we're going to be out of town for 2 weeks. Okay.
Yeah, don't quit. Here are the things not to do. Don't quit your job. Try not to go on vacation. Try not to take long periods of work time off from work. You want to, if you're going, don't buy a car, don't buy a new motorcycle, don't get a new furniture set.
And don't buy furniture until you close, please.
Yeah, don't buy furniture until you close.
Trust me, they find the credit pull.
So, anyway, yeah, it's really important to plan the trip, plan where you're going before you start going looking at homes, right? And because you also want to know, if you're looking before you go shopping, you want to know, are you ready to go shopping? Are you prepared when you find that beautiful house that you fall in love with to put in the offer? If you're not ready, don't do it. You're going to get yourself in trouble. Perfect application. I agree with what Megan said. It's just having your information filled out properly.
Accurate. It might not be what you think they want to see, but it's accurate.
Yeah.
But I wanted to piggyback on what Peter said about knowing what you can qualify for, understanding, putting that strategy into place, because I think a lot of us forget it's, not so much just about what you can afford on paper. It comes down to what you're comfortable with,
There you
right?
go.
Because you can afford a
There you go.
$7,000 a month
That's
mortgage
it.
doesn't mean you want to pay $7,000 a
Right
month,
on. Right
right?
on.
And that's where that conversation comes into play. And my favorite part, and I was thinking about this actually probably about yesterday or 2 days ago, I was walking my dog. My favorite part about our industry, or kind of how we operate as a team, is these consultations, these initial phone calls, Zoom calls, in-person meetings, they're 100% free, right? The same way you're going on Google and searching up how to get a mortgage and what it is, these calls, these conversations, whether it's an hour, 2 hours, 3 hours, it really just depends on the individual, how long it takes them to find that home. But all of those conversations are free. So why not take the time to work with a team, with an individual who's not only experienced, but actually cares a little bit, right? It's not about what you can
Alex, love it.
qualify for. It's about
Another thing is,
what
if
you
you and
crave.
your real estate agent rush it, if you rush it because you need to put that offer in right now, that's when mistakes happen. And you haven't done that consultation till you found the house you want to put an offer on. It's
Yeah.
just not going to be as smooth and enjoyable of an experience
Yeah.
for you
Very
or
good.
anyone involved.
Very good. And on what Alex said, ladies and gentlemen, we don't get paid. Well, as a loan officer, no, all of us actually, we don't get paid until your deal closes and funds. And hopefully you're happy. We want happy customers. But so we do all this upfront work, right? I mean, how many industries do upfront work, right? Could you imagine an attorney doing all the work and not get paid till the end? I guess actually there's some attorneys that do when they get a percentage, right? They get a
Yeah,
percentage of the winnings. But anyway, yes, I 100% Alex, take advantage of us, and we do it, by the way, as you guys know, to build relationships, right? It's all about relationships, right? We want to educate you, and that's why we're here today having this conversation, right? To educate you and let you know, hey, this is what a great team will provide for you so you can feel comfortable as we hold your hand through the process and make things a lot easier and smoother for you.
great. Oh, this was awesome, guys. I appreciate you taking the time to kind of break some of this down for us. So thank you,
Thank
Mr.
you.
Karlin. Thank you, Megan. And I think the important notes here is underwriting is all about risk. Good risk, bad risk. Is the bank willing
Minimize,
to take on the
minimize the
risk?
risk.
Well, let's find a way to minimize your risk up front. And that's exactly by talking to the right individuals who are here to guide you and set you up with the right plan and strategy. So thank you very much for listening.